Welcome back to the Dividend Heroes Investment Channel. Today our hero has a list of the 5 best dividend stocks to hold forever. We're talking about stocks that you buy once and hold for decades while they continue paying you dividends year after year, no matter what the market is doing. These aren't just any stocks though. These are companies with incredible dividend safety scores, strong free cash flow, and a history of growing their dividends year after year. And stick around for a bonus stock that's on the cutting edge of renewable energy. Over to you, DH.
Hello, I'm the Dividend Hero. Let's get into it. Stock number 1, Johnson & Johnson, J&J. First up, we've got Johnson & Johnson, J&J. If there's one company you can count on to keep paying dividends through thick and thin, it's J&J. This healthcare giant is a dividend king, which means they've increased their dividend every year for over 50 years. J&J's dividend safety score sits at a stellar 99 out of 100, incredibly reliable. Because their free cash flow is massive, with over $20 billion in free cash flow annually. J&J's current dividend yield is about 2.8%, and they've grown that dividend at a 6% annual rate over the past 5 years. That's what we call a rock-solid dividend stock. Now, let's break down what a $10,000 investment in J&J could grow into over time. Based on the company's 5-year compound annual growth rate, CAGR, and assuming you reinvest your dividends, here's what your returns could look like. After 10 years, your investment would be worth about $39,497. And you'd be collecting roughly $1,790 per year in dividends. After 20 years, that $10,000 grows to $78,681, with dividends totaling about $3,200 per year. And after 30 years, your original investment would grow to nearly $158,062, and you'd be pulling in over $5,700 annually in dividends. That's the power of long-term dividend growth and compounding. Stock number 2, Coca-Cola. Next up is the beverage king itself, Coca-Cola, KO. With over 130 years in business, Coca-Cola is a global brand powerhouse. It's a dividend aristocrat, having raised its dividend for over 61 consecutive years. Coca-Cola's dividend safety score is a strong 80, which shows their payout is reliable, even with their high dividend yield. The company's free cash flow is about $10 billion annually, providing plenty of cushion to maintain and grow its dividend. Coca-Cola's current dividend yield sits at 3.2%, and they've increased that dividend by 4% annually over the past 5 years. Let's talk numbers. If you invested $10,000 in Coca-Cola today and let those dividends grow and compound, here's what could happen. After 10 years, that investment would grow to around $25,600, and you'd be collecting $1,480 annually in dividends. After 20 years, it would grow to $57,400, with about $2,200 per year in dividends. And after 30 years, your investment would be worth $124,800, and you'd be making $3,200 annually in dividends. Coca-Cola's reliable dividend and iconic brand make it a forever stock you can hold with confidence. Stock number 3, Procter & Gamble. Coming in at number 3 is Procter & Gamble, PG. PG is another dividend king with 67 consecutive years of dividend increases. This is a company built on essential household products. Think Tide, Pampers, and Bounty. So no matter what's happening in the economy, people will always need their goods. Procter & Gamble has a high dividend safety score of 90, backed by $12 billion in annual free cash flow, which means their dividend is well supported. Their current dividend yield is 2.4%, and they've been growing that dividend at a 6% annual rate over the past 5 years. Now, here's what your money could look like with Procter & Gamble. If you invested $10,000 today and let the dividends compound. After 10 years, your investment would grow to about $25,700, and you'd be collecting $1,700 annually in dividends. After 20 years, that would grow to $58,300 with $3,100 in yearly dividends. And after 30 years, your $10,000 would balloon to $129,500 with over $5,500 per year in dividends. This is a company that not only pays you, but keeps growing those payouts over the decades. Stock number 4, Realty Income, O. Next up is Realty Income, O, the monthly dividend company. Realty Income is a real estate investment trust, REIT, that invests in commercial properties leased to top-tier tenants like Walgreens, 7-Eleven, and FedEx. What sets Realty Income apart is that they pay their dividends monthly, which is a huge plus for anyone looking for consistent cash flow. With a dividend safety score of 70, Realty Income is solid, but tends to reinvest most of its free cash flow into acquiring new properties, about $1.5 billion in free cash flow. Their current dividend yield is a hefty 5.4%, and they've been growing that dividend at a 3.5% rate annually. Here's what your investment could look like with Realty Income. Put in $10,000 today, and after 10 years, your investment could grow to $27,000 with annual dividends of $1,770. In 20 years, it grows to $57,000 with dividends totaling $2,500 per year. And after 30 years, you're looking at an investment worth $116,000 with $3,600 per year in dividends. Plus, that monthly income means more frequent cash flow, which can be reinvested faster. Stock number 5, Microsoft, MSFT. Last but not least, we've got Microsoft, MSFT. Now, Microsoft isn't typically known as a dividend stock, but it's becoming one of the best dividend growth companies out there. They've raised their dividend for the last 20 years, and with a dividend safety score of 99, Microsoft has tons of room to keep increasing its payout. Their free cash flow, a whopping $65 billion. Yes, billion. Their dividend yield is on the lower side at 0.9%, but they've been growing that dividend at an impressive 9.5% annual rate. Here's where Microsoft really shines. If you invest $10,000 in Microsoft today and hold it for the long term, after 10 years, your investment would grow to about $107,500 with annual dividends of $1,470. In 20 years, that $10,000 could grow to $1,131,500 with $3,630 in annual dividends. And after 30 years, you'd be sitting on an investment worth $11,994,500, collecting nearly $8,500 per year in dividends. That's the power of combining dividend growth with a company like Microsoft's explosive stock appreciation. Bonus stock, Brookfield Renewable Partners. Now for the bonus stock, Brookfield Renewable Partners. This one's for those who believe in the future of renewable energy. Brookfield Renewable owns and operates a portfolio of renewable energy assets like wind, solar, and hydroelectric power. With the global shift toward clean energy, this stock has incredible growth potential. Their dividend safety score is 65, which is decent for a high-growth utility company. Brookfield Renewable's free cash flow is about $2 billion, and their dividend yield sits at 4.7%, with a 6% annual dividend growth rate. If you invest $10,000 in BHE today, after 10 years, your investment could grow to $33,800 with $1,700 in annual dividends. In 20 years, that would increase to $90,200 with $3,100 per year in dividends. And after 30 years, you'd have an investment worth about $242,500, earning over $5,700 in dividends every year. The best part, you'd be investing in a company that's helping to build a sustainable future. Back to the studio.
Those are our heroes' picks for the 5 best dividend stocks to hold forever, plus a bonus. These companies have a proven track record of growing their dividends, and with strong fundamentals like high free cash flow and reliable dividend safety scores, they're built for the long haul. Whether you're just getting started with dividend investing or looking to strengthen your portfolio, these stocks are worth holding on to for decades. So what are you waiting for? Start investing today, and your future self will thank you when those dividend checks are rolling in year after year. If you found this video helpful, smash that like button, subscribe to the Dividend Hero, and let me know in the comments which dividend stock you plan to hold forever. The information provided in this video is for educational and informational purposes only. It is not intended as financial advice. Always do your own research or consult with a licensed financial advisor before making any investment decisions.
Thanks for watching, and I'll see you in the next